This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on June the 12th, 2015. Our time is 8:47 Mountain. Our radio show runs on your favorite radio stations, including 6:30 CHED in Edmonton, Sunday afternoon at 3. Don't forget, if you ever miss a radio show, they are archived. Streaming anytime for your convenience of listening at rarecoloreddiamonds.com and as well HESradio.com. We have a podcast. The podcast is through iTunes. Type in The World Financial Report on Radio. If you have iTunes on your portable device, we go anywhere you do. In fact, you can subscribe to the podcast and the shows will come in automatically for you every week. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. The telephone number, 1-800-432-1022, 1-800-432-1022. And our featured diamond of the week from rarecoloreddiamonds.com is a beautiful .20 carat, round, brilliant cut, fancy, vivid, purplish pink argyle. We'll talk more about it as the show goes on, in particular the second half of the show. But if you're interested in our featured diamond, go to rarecoloreddiamonds.com, featured diamond of the week. If you do not get our free weekly newsletter, it's in our newsletter as well. You can get our newsletter from Harold. We send our newsletter out via email, free of charge every week. You can spend 5 minutes going through and be completely up to date on the news of the week, or spend hours if you choose. This week, the IMF walked away from negotiating with Greece on a bailout package. What does that mean? Possible default. Greece leaving the Eurozone. Germany is planning for a Greek exit from the Euro, preparing for debt haircuts and capital controls. Also, we have a story in our newsletter. Record corporate profits. These numbers may not be real. A lot of them could be completely phony. You'll find that story in our newsletter. Also, Argentina is on the hook for $5.4 billion instead of $1.7 billion in unpaid sovereign debt. In fact, they went to court in the United States, different hedge funds, and the court ruled they actually owe $5.4 billion, not just $1.7 billion. The noose is tightening on Argentina with this sovereign debt. Also, the U.S. Justice Department has begun examining trading in U.S. Treasuries, and they're going to look at manipulation in gold, silver, and oil. And who knows, we could see, which we did about a month ago, $5.8 billion in fines to major organizations, financial organizations. It could happen again if they find anything in these markets. Also, the United States posted a deficit of $82.4 billion in May. And those in the United States who are part of Obamacare, and really you have no choice, insurance premiums, and I know people were warned in the United States about this, they are facing double-digit hikes in their premiums, maybe even larger hikes. So as if things are not bad enough in the United States for the average everyday person trying to get by financially, here you have Obamacare premiums going up by double, maybe even triple in some cases. But Harold, we have a beautiful featured diamond this week. It's a .20 carat, round, brilliant cut, fancy, vivid, purplish pink argyle, and people can take a look at it at rarecoloreddiamonds.com.
You bet they can, Randy, and the diamond market is on fire right now. We're so busy, and people looking at huge diamonds, so it's a very, very exciting time to be in the alternative asset market. Obviously, there's a lot of fear in the financial markets, mostly in the paper asset markets, mostly the stock market. It's down about 160 points today. It's been all over the place, one day up, 2 days down, that type of thing, but again, we've always been a firm believer at this time that the U.S. stock market does not reflect the actual economy of the United States, which is in trouble. Let's face it. It's loaded with skullduggery. The fact is that nobody believes for good reason, the unemployment numbers, and now they're coming out and saying that, corporations are under so much pressure to produce for stockholders and shareholders that they're now lying about profits. They're lying about expenses and things like that just to make profits look even better. And that's what this seems to be all about now. The financial markets are all manipulated, and they're manipulated for the good of very, very few people, because the general public very, very seldom ever gets any rewards. It's always the people on the inside, the insiders on Wall Street. It's the general public that always gets hurt. The fact is that the manipulation that's gone on in the markets for all these years now is now starting to come to the surface, and we saw with the banks in Europe and in the United States and Canada all over that got fined billions of dollars for manipulating the currency markets. Now, they made way more than that. They made fortunes in the market. And it was, even though 5 or 6 billion sounds like a lot of money, to them it was a slap on the hand, because they made so much more money than that. But the problem is that now they may come up and they may find some of these banks and brokerage firms basically for manipulating gold and silver and oil. So they'll give them another fine that appears to be huge, but it's nowhere near what these companies made. And the worst part of it all is that the SEC may fine these companies and these banks, but none of it goes back to the investors that lost all their money. So, again, who even really cares about these? Because we don't get any of it. The fact is that you put up your hard-earned money and you make an informed decision to go into an investment like oil or gold or silver or currencies or whatever, and find out that you don't really have a shot, because the banks have a different agenda. They're all about making money. They don't care about the fines, because the amount of money that they're making is gigantic, and when they do get fined, they're happy to pay it, because it's nowhere near what they made. And again, it's unfortunate that it's the general public, the small investor, that always gets hurt in that situation. That's why we're saying at this point here, don't trade gold and silver. Don't trade commodities. Buy and hold. There's a reason why you want to be in physical gold and silver, and it's what's coming up. There's no doubt that when they play with the markets as much as they do, the markets are going to do what they're supposed to do. And the fact is that in 2011, and we've discussed this many, many times, but a lot of people don't understand it, is the fact that there's a reason why gold went from $250 in 1999-2000. There's a reason that it went from $250 all the way up to $1,900 by 2011. So basically, in a period of about 11 years, you saw gold go from $250 to $1,900, and there had to be a reason for it. The major reason for it was, number one, the fall of the U.S. dollar. The U.S. dollar had plummeted, and by 2011, it had actually gone all the way down to 72 cents, and that's what caused the gold market to go from 250 all the way up to 1900. And the same situation for silver. We saw it go from below $4 all the way up to 50. So how is it possible? What in the world would have happened that would have made gold and silver go from such a bullish move from 250 all the way up to $1,900, and then one day out of nowhere the market drops down to 11 and change? What in the world would have caused that? A war? A government going? What in the world would have caused that? What caused it was the fact that, and you have to understand commodity laws, but the fact is that there has to be the equivalent amount of physical gold and silver, or any commodity, and when you're trading commodities, there has to be physical silver backing up the contract. And because gold and silver got so popular during that run, where it went again from 250 in gold up to 1900, and the dollar was falling and everything was going in our favor, we were on our way to $2,000-$3,000 gold. We're on our way to $75-$100 silver. And then all of a sudden the market plummeted what appeared to be no reason. The reason was it had nothing to do with anything fundamental. As I mentioned before, there was no war breaking out. There was no major change in financial policy, no nothing was happening that would have caused gold and silver to plummet like that, except it was the agenda of the exchanges where gold and silver were traded that made that happen. They made gold and silver so expensive to trade at that point that gold and silver had no other opportunity but to fall, because the speculators in the market couldn't afford the margin anymore, and the market prices fell substantially. That had nothing to do with any of the fundamentals for gold. That's why this was such a horrible situation. So now we see gold go from 1,900 all the way down to 11 and change, and people that were leveraged lost all of their money. There's no doubt you cannot survive an $800 drop in gold if you're leveraged, and that's what happened. And what's so unfortunate about this situation where the government doesn't care. He doesn't care about the small investor that made the right decision at that particular point. I've got to credit my listeners to our radio show, Randy, that took our advice back in 2000 when nobody was even talking about gold. And we made a strong case for buying gold, and we were right. Gold went from $250 to $300 to $500 to $800 to $1,000 to $1,500 to $1,900. That's why you want to own physical gold. You don't buy it in the futures market because you're going to lose your money. You could be in the biggest bull market of all time, which is what we had experienced, and people still lost their money because they didn't trade it in the right way. You don't finance, you don't leverage, you don't do those type of things when you're trading commodities. You own them outright. Physical gold and silver is the way to go, because when you start getting emotional about a commodity or a trade that you're making, you don't make the right decisions. And again, it was unfortunate that nobody blew the whistle or never made a big deal about the exchanges and the government, which is the federal government basically, because they back every contract that is purchased. So all of a sudden, gold falls from 1,900 to 1,100 and change, and nobody says anything about it. It was one of the most underhanded moves in the commodity markets that I've seen in my 35 years in business. Now again, this year, next year, whatever, if all of a sudden they bring charges against J.P. Morgan and other banks that instituted this and and everybody that was involved in manipulating these markets, yeah, they'll get fined, but how much of that goes to the general public, the people that lost their money when they never should have? We are in the biggest bull market of all time, and the exchanges destroyed it because of their own stupidity and their own greed. So that's where we sit at this particular point. For the last 3 years, we've been trading in a range. We've been trading between $1,125 and $1,300 in gold. And I do believe we are going to see a breakout, but before the breakout happens, I think we have to see the market go lower. And the reason for that is that we're going to see a stronger U.S. dollar again, especially during the summer when the markets are lightly traded. If Greece goes under, which it looks like they're going to, that means that we're going to get some action in the euro. The euro is going to fall because the Greek economy will be gone. Greece will be out of the euro and back into their old currency. Number one, that's terrible news for Greek citizens that have their money in their own currency, because they're going to lose probably about half of their net worth. That's how severe these commodity markets and currency markets can be if you don't understand how to trade them. So, again, my strongest recommendation with all this that's going on, it's way bigger than us. We're small investors. We're the small guy. What we need to do is be conservative, not take any unnecessary risks. Don't speculate. Don't leverage your positions. Don't finance your gold. Own it outright. Take it home with you. Own it outright, because what's going to happen between now and probably the fall is that we will see the U.S. dollar strengthen over what's happening in Europe and other situations, and that's going to push gold down to $1,100 or lower. It could possibly go to $1,000 without hurting the gold market. What that will do is put gold under production cost levels. Silver is already under production cost levels. That means that probably during the summer, we're going to see gold and silver mines closing down. That's going to create a shortage in the marketplace, and that means in September, October, when we come back for business and things start to pick up and other news enters the market, we could see another explosion in the gold and silver markets. But before that happens, I'm pretty confident that we'll see a short-term decline because of the strength of the U.S. dollar. So let's prepare for that. Let's be smart about this. Let's get excited about making money in these markets again, but let's not do it prematurely. Let's get set up and ready for this to happen. So, again, Randy, at this particular point, we're going into the summertime. We are going to see some action in Europe because of Greece and the euro and the U.S. dollar and things like that. We're going to see some movements in the market. During the summer, there is no doubt that the markets are lighter traded, so you can see more exaggerated moves. But I'm pretty comfortable with the fact that coming back in September, October, we're going to be ready for some major market moves, and we're going to be right on top of them.
One of the great quotes we have this week in our free weekly newsletter is from Egon von Greyers, who is out of Switzerland and an advocate for investing in hard assets. He said, "We live in an illusionary world where the public's illusions are about to be smashed in the next few years. As an example, the illusionary fortunes of the very wealthy have gone up exponentially in this century. They believe they are creating wealth based on their skills in investing. Little do they realize that the real reason is because they are standing near the printing press in the biggest Ponzi scheme in the world history." That is just a stunning statement from Egon von Greyers, really saying, where we live today and where we're at today financially is because of central banks and their printing presses. How do you protect yourself? We believe it's hard assets. Gold, silver, diamonds. Speak with Harold about investing in our featured Diamond of the Week. It's a .20 carat, round, brilliant cut, fancy, vivid, purplish pink argyle. Go to rarecoloreddiamonds.com. You can see video of the diamond there. Click on Featured Diamond of the Week. And it was interesting to note that Jean-Marc Leberher, who's the managing director of Rio Tinto Diamonds, was quoted as saying the overall price for argyle pink diamonds has tripled since 2000. Richard Russell mentioned that another high-class area of transportable tangibles is diamonds. He said that you can transport $10 million worth of diamonds in the cuff of your trousers. Obviously, we're not saying that you should do anything illegal. We believe everything should be above board and legal. But obviously, if things got very, very dicey, diamonds are real estate in your pocket. Portable wealth. Take a look at our featured diamond, a .20 carat, round, brilliant cut, fancy, vivid, purplish pink argyle. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com, 1-800-432-1022, 1-800-432-1022. We touched on it earlier in the show, and I think it's a very important article that everyone should take the time to learn about and read, and that is about corporate profits. It's actually very, very surprising that record corporate profits, actually, those are made-up phony numbers, if you can believe it. And this was a mainstream article that was written this week. It's not from a fringe website. They say those record profits that companies are reporting may not be all they're cracked up to be. As the stock market climbs ever higher, professional investors are warning that companies are presenting misleading versions of their results that ignore a wide variety of normal costs of running a business to make it seem like they're doing better than they really are. What's worse, the financial analysts who are supposed to fight corporate spin are often playing along. Instead of challenging the companies, they're largely passing along the rosy numbers and reports recommending stocks to investors. Companies are tilting the results, says fund manager Tom Brown of Second Curve Capital, and the analysts are buying it. An analysis of results from 500 major companies by the Associated Press, based on data provided by S&P Capital IQ, a research firm, found that the gap between the adjusted profits that analysts cite and bottom line earnings figures that companies are legally obliged to report, or net income, has widened dramatically over the past 5 years. At one of every 5 companies, these adjusted profits were now, if you can believe it, were higher than net income by 50% or more. Many more companies are in that category now than they were 5 years ago. And some companies that seem profitable on an adjusted basis are actually losing money. And Harold, I agree with Egon von Greyers. We are living in an illusionary world, and at some point the Ponzi scheme will be eventually discovered by the mainstream. And as a result, I think people are going to be very concerned with the investments that they have and take a hard look at investing in hard assets like diamonds, gold, and silver. We have 3 minutes in our segment.
Well, again, times change, and you've got to be able to change with it in order to stay ahead of the curve. And again, at this particular point, everything is so confusing and so out of our hands personally. The only thing that we can do is take control of our own situation. We know how much risk we can personally stand. Some people love to gamble. Some people don't mind taking a risk. Myself, I'm very, very conservative. I never leverage. I am the most conservative person in investing that you've seen. So I'm comfortable with the way that I build my success and my wealth. And it's at this point, when the risk is as heavy as it is at this time in stocks and bonds and commodities and everything else, that's when I tend to, lay back and be much, much more conservative. Because again, it's not always about capital appreciation. It's about keeping your money. And that's the most important thing, because if you have your money, you live to fight another day. But if you gamble it all away, you've got absolutely nothing. And we all know in today's marketplace, with the economy the way it is, it's extremely difficult to make your way back when you've lost your money. There's not a lot of avenues in which there's easy money to make. It used to be you could make it in stocks. You can't do that anymore. You can't do it as easily trading commodities or real estate or anything like that. So as we get a little bit older, 50s, 60s, and 70s, it's much more important that we put away our money conservatively, because, again, you just can't make it back again that easy.
RareColoredDiamonds.com is Harold's website. In fact, it's coming up on its 10th anniversary in August of this year. 10 years, hard to believe. Harold wrote an article in August of 2005. Naturally fancy colored diamonds, best kept secret. And here we are in 2015, coming up on August in a few months, and it'll be the 10th anniversary of RareColoredDiamonds.com. And you can take a look at our featured diamond of the week. It's a .20 carat round, brilliant cut, fancy, vivid, purplish pink argyle. And if you've ever wondered what makes pink diamonds pink, I went back and put in the newsletter again for those that might have missed it, a great article that explains why pinks are pinks. And you can see that. Connect with Harold, get our free weekly newsletter at RareColoredDiamonds.com or call 1-800-432-1022. Our featured diamond of the week, go to RareColoredDiamonds.com right now. Take a look at the .20 carat round, brilliant cut, fancy, vivid, purplish pink argyle. RareColoredDiamonds.com. You can speak with Harold personally and privately about investing in hard assets by calling 1-800-432-1022. That's 1-800-432-1022. Going to come back and talk about more hard assets, in particular diamonds, as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on June the 12th, 2015. The time is 9:14 Mountain. Our radio show runs on 630 CHED in Edmonton. Don't forget, we have a podcast. It goes along with the show. If you have any portable electronic device, iPad, iPod, iPhone, obviously you can have iTunes on your portable device. Type in under the category podcast, The World Financial Report on Radio. You'll find our podcast there. You can download it and listen to it at your leisure. Our show is portable. We go anywhere you do. And as well, the shows are streaming live, archived. If you ever miss a show, on Harold's two websites, RareColoredDiamonds.com, RareColoredDiamonds.com, and HES Radio.com. RareColoredDiamonds.com. Featured Diamond of the Week is a .20 carat, round, brilliant cut, fancy, vivid, purplish pink argyle. And there was a statistic that I wanted to dig up again that we had a little earlier in the year, and I think it's very important for people to understand. The overall price for argyle pink diamonds has tripled since the year 2000, according to Jean-Marc Leberher, and he's the managing director of Rio Tinto Diamonds. And maybe, even in some cases, they've quadrupled. It just depends. We have an interesting article in our free weekly newsletter, which you can get from Harold. It's what makes pink diamonds pink. And also, another article I thought was important to bring back for those that might have missed it. The Wall Street Journal did a story on dazzling returns, and they were talking about high net worth people investing in jewelry as portable investments, and colored diamonds being a part of that in a major way. You're seeing high net worth people investing, sure, in cars, art. We had that story last week, Hermes bag, watches, but diamonds are a huge part of alternative asset portfolios that a lot of wealthy people are now putting money into due to the fact of what we're seeing around the world with the financial crises continuing in many countries. But Harold, our featured diamond of the week is one that has already appreciated in value even from a year ago.
You better believe it has, Randy. You know, at first it may appear that it's a small diamond. However, Argyle pink diamonds, 95% of them are under a quarter carat, so it's a normal size Argyle diamond, number one. Number two, what makes that diamond so rare is several things. First of all, the color. It's fancy, vivid, purplish pink, which is one of the great colors that come out of the Argyle mine. It's spectacular. And what really gives a diamond value is how much saturation in the color. And as you can see by the picture of this diamond, it's very, very heavily saturated. Also, the fact that it is round brilliant, which is extremely rare. One of the most difficult cuts to get in a colored diamond is a round diamond. So this is round brilliant, very rare. The best color you can get, color-wise, I'd estimate it as a 9 out of 10. It's absolutely beautiful. And over the last year and a half, that diamond has pretty well doubled in price. And as we get closer to the Argyle mine closing down, which is less than 4 years from now, you're going to find that a diamond like that could be 10 times the price it is today. And I wouldn't doubt that that diamond one day will be a heavy six-figure diamond. And that's what's happening in the diamond market right now. We're looking at situations in Europe that are so concerning, with Greece going off the euro and basically being a bankrupt country, and the debt it's going to leave behind is going to be insurmountable. It's going to bring down other countries because they owe a tremendous amount of money. So just think about this. You're a Greek citizen. You've got your money in euros, which even though at one time the euro was at 160, 165, it's now down to about 110. And it's going to drop lower if Greece fails on making their debt payments, which looks like that's going to happen, which means that it looks like the euro could actually go down to maybe 105, 104 in that area. At the same time that the U.S. dollar is starting to rally. It would not surprise me in any way, shape, or form that the U.S. dollar and euro will be even at some time this year. So again, we got to prepare for that. But just think about this. If you have your money, you're a Greek citizen, you had your money in euros, now Greek is going off the euro, and you've got to convert your money back to the Greek currency, which will be worth maybe a third of what the euro is, even though the euro has been beaten up. That's why you don't go back into that same currency. That's why you take whatever wealth you have and put it into a hard asset, an alternative asset, not stocks, not something you can lose your money in. Put it into an asset that doesn't decline in value, that goes up in value and can be sold in other currencies. That's where you should be putting your money into, some of your money into diamonds, rare colored diamonds like the featured diamond. That diamond is one of the best investments you could ever make. It will never, ever go down in value because there's no more of them. In fact, if you look to find fancy vivid pink or fancy vivid purplish pink Argyles today, hardly any of them exist. In fact, what's seeping into the mine now, one of the reasons why the Argyle mine is going to close down is, number one, production is way, way down, and number two, brown is starting to seep into the mine, which is the last leg of the mine. Means that instead of getting vivid purplish pinks or intense purplish pinks or beautiful straight pinks, you're getting brownish pinks. And those are not the diamonds that you want to own for investment purposes. So, again, while you still have the opportunity, take some of the money that is risk that you have in paper assets, bonds, stocks, those type of things, and put some of it into a rare colored diamond, mostly an Argyle pink. You'll never get another opportunity to do this because there is no mine in existence today that does what the Argyle mine does, which is produce 95% of all the pink diamonds in the world. Now, don't get the wrong idea. The pink diamond market is a minuscule market. It's tiny. If you take the whole year's production of pink diamonds from the Argyle mine and pour it into a champagne glass, it won't even fill the whole glass. That's how small the market is, and 95% of those diamonds are under a quarter carat. Imagine how valuable it is to get a diamond that's a half a carat, or 3/4 of a carat, or the ultimate, to get a pink diamond that is over a carat. The prices have gone berserk. What we try to do is keep the prices as low as possible for our clients. And the reason for that is that we're the only company that resells diamonds. Or that's what our plan is we built 8 Seagull Fine auctions. Very, very few clients are selling diamonds at this point. They understand the value, they understand the need for an asset like that, but the fact is you don't want to hold a diamond for a short term. To hold a diamond for 2 or 3 or 5 years, you're not going to make any money on it. It's not like holding a stock or something like that. It's something that you hold for the longer term. And the longer you hold it, the more and more it goes up in value. And hopefully, if we bought diamonds for our future and we've done well enough that we don't need to cash it in, it's something that should be handed down to the kids and the grandkids. That's where the biggest money comes from. That's where you sit back and say, man, oh man, did I make a great investment for my family? Just like my wife's girlfriend, whose grandmother bought a 5-carat pink diamond ring 50 years ago for $50,000, and today, 50 years later, that diamond is worth $5 million. What kind of return is that? That is $50,000 to $5 million. Again, it took 50 years for that to happen, but that's what that asset is all about. It's a longer-term asset that does not trade on an exchange, so you don't get the fluctuations that you get in stocks and commodities. And the rarer and rarer that these diamonds become, because there is no new mines that are opening up, the Argyle mine is going to close, hardly any blue diamonds are around. Rare colored diamonds are one of the best investments you could possibly make. And again, what we're doing is building our secondary market. During the summertime, business is slow. Most clients are on vacation. I work out of Colorado for 4 months. When we come back in September, October, that's when the markets really start to pick up. And again, we will be holding our auctions again, coming back into October, November, December, and going into 2016. We're going to have some amazing auctions this year. We've got some beautiful diamonds put away, diamonds that we bought 10 years ago, Argyle pinks that when nobody even knew what the Argyle mine was all about. We've got tremendous collectibles, coin sets, and very valuable pieces that we're going to start off the end of the year with a phenomenal auction that will be a lot of fun. It'll be highly publicized. It'll be for our Canadian and American clients and clients all over the world. But again, at this point, Randy, the featured diamond, even though it appears to be a smaller diamond, is so ridiculously rare, and a diamond like that will skyrocket in price. I would not be surprised to see that diamond in 7 years from today, give it 5 years for the mine to run out, and 2 years for all the diamonds to be gone. A diamond like that could go up 1,000% with absolutely no problem. We've seen it happen in other diamonds, and I'm pretty sure it will happen with the featured diamond also.
Take a look at our featured diamond of the week at rarecoloreddiamonds.com. We have a picture of the diamond in our free weekly newsletter. Go to rarecoloreddiamonds.com, click on Featured Diamond of the Week. This week's diamond is a .20 carat, round, brilliant cut, fancy, vivid, purplish pink Argyle. And as Harold has explained to us in the past, we are getting down to a point where there are not a lot of diamonds left in the world from the Argyle mine. And it's one of those things that people really have to understand and take a hard look at and educate themselves. We have a rare, very rare opportunity here to get involved in an investment that we know 90 to 95% of that investment will be going away. And what's in the world today for a market supply is obviously very limited as it is. and no new pink diamonds. 90 to 95% of the world's pink diamonds come from the Argyle mine. At some point here in the next 4 or 5 years, the Argyle mine will shut down. As a result, that means no new pink diamonds. And really, Harold, I can't think of any other investment where we've had a scenario where people have really known well in advance that it's scarce to begin with, and it's going to become even scarcer in the future. And really, the supply will go away by 90 to 95%, leaving only a very fraction of a small amount of pink diamonds to come out of mines around the world. We know that no new mines are being found, and yet the appetite for diamonds is increasing. We know there's an appetite in North America and Europe, but the appetite is increasing in India, in the Far East, Asia, and China, all over the Far East. So it's a recipe for, if we are correct, our thesis is correct, a potential for somebody to make a lot of money. All they have to do is make that investment, sit back, give it time, and Harold, I think people are going to be very happy.
I would certainly say so. We're already starting to see huge moves in the market. Clients that bought 2 years ago and are trying to come back and buy again now are finding that the prices are so substantially higher than where they were at first. It's upsetting to them, but then when they sit back and say, well, something over 2 years, I've already picked up 50% of my Argyle, how can I be upset about that? The most important thing is timing. You've got to be able to time these type of investments. The closer we get to the market, the mine closing down, the more and more expensive these diamonds become. So again, take your stand at this particular point. Take some money out of the stock market, out of the bond market, out of any paper investments that are at risk at this point, and put some of it into a diamond. You're going to find that it's going to turn out to be the best investment that you've made. You're not going to have any sleepless nights. You're not going to worry about a crashing market type of thing. It doesn't happen in the diamond market, especially in the pink diamond market, which is such a tiny little market. So again, those that are in the market with us, congratulations. Those that are sitting on the sidelines, get involved in this while you still can, while the prices are still reasonable. Now, don't forget, when we go to sell these markets 5, 7, 10 years down the road, there's clients all over the world in different currencies that these diamonds are bargains for. Right at this particular point, there are 3 currencies that are stronger than the U.S. dollar, 1 being the British pound, 2 being the euro at this point, and 3 being the Swiss franc. Soon that's all going to change. So again, if the currency markets are changing, if the commodity and stock markets are changing, if everything around the world that we know is changing and has got inherent risk, why not take some money and put it into an asset that never declines in value and has the potential to go up 5 to 10 times what you paid for those diamonds? This is the time to do it now. While there's still some type of inventory available, we're putting all of our money back into the business and trying to buy as many top Argyles as we can from other collectors, from any source that we can. We still get a large amount of diamonds from Argyle, but most of them we sell off to jewelers in Europe because they're not diamonds that we would offer as investment quality. So again, very, very few diamonds to come out of the Argyle mine are investment quality, but the ones that we have are the ones that are going to make you the paramount amount of money.
This week's featured diamond, a .20 carat, round, brilliant cut, fancy, vivid, purplish pink Argyle. All you need to do to see this diamond, it's been videoed, and Harold's website, the only diamond website out there that has the video of the diamonds, rarecoloreddiamonds.com, featured diamond of the week, .20 carat, round, brilliant cut, fancy, vivid, purplish pink Argyle. Should warn you, come Monday, with a diamond like this, it will go very, very quickly, because people know that with the Argyle mine shutting down, 90 to 95% of the world's pink's going away. And let's face it as well. You have a scenario where people are constantly adding to their portfolio of diamonds, or maybe starting a portfolio. And Harold, this would be a perfect diamond to start a portfolio with. It would be a great way to get involved in diamonds for the very first time.
You better believe it. This is a diamond that whoever does own it will make a fortune of money with. It's a beautiful diamond. It's very rare because of the cut and the color and the fact that it's an Argyle. And again, it's only common sense that once the Argyle mine closes down, there's no more of these diamonds. So all those that understand supply and demand understand that this is one of the best investments you can make.
Don't forget to speak with Harold at any time about investing in hard assets, diamonds, gold, and silver at rarecoloreddiamonds.com. rarecoloreddiamonds.com, 1-800-432-1022. That's 1-800-432-1022. One of our top stories of the week was record corporate profits, and those numbers are actually, in a lot of cases, being made up right now. If you did not hear what I had to say earlier in the show when I read a part of the article, get our free weekly newsletter from Harold at rarecoloreddiamonds.com, 1-800-432-1022. Harold will be happy to send it out to you. Read that article, Record Corporate Profits. Those numbers are made up, not phony. And this is getting to be a major, major concern for those that are invested in paper assets. And that's one of the things, that's one of the beauties of being involved in the hard asset market, Harold, whether it be diamonds or gold or cars or watches or art, or even as we saw last week, there was a Hermes bag that sold for over $200,000 at auction. These are the things you do not have to worry about, the skullduggery that goes on Wall Street and as well with big major banks manipulating the Forex market, allegations of the metals market as well, which we believe. These are the things that you don't have to worry about because you're in control. You have the hard asset in your hand. You have it, obviously, it's wearable. You can wear wealth anywhere you go. And you can obviously have it tucked away wherever you choose to have it safely secured. So you are in control, unlike the case when it comes to the stock market. You're not in control. And obviously we have to deal with companies now not recording their profits correctly, and that is a huge, huge concern.
Certainly is, Randy. That's a crazy thing. How do you make an informed and intelligent decision where to invest your money when everything is a lie? Everything about Wall Street is a lie. You can't believe anything. They manipulate markets. They lie about the markets. They steal people's money. They pay fines that are far less than the money that they made. None of the money goes back to the victims. It's not a good scenario. There's no credibility in those assets, which is one of the reasons that I stay away from it.
Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com, 1-800-432-1022, 1-800-432-1022. Our featured diamond of the week is a .20 carat, round, brilliant cut, fancy, vivid, purplish, pink, argyle. You can speak with Harold about investing in this diamond. Connect with him, rarecoloreddiamonds.com or 1-800-432-1022. One of the concerns that I think is very, very legitimate, and that is the situation we have right now in Greece. And Greece is in a situation where they are negotiating a bailout package. They're down to hardly any money. They defaulted last week. They did not pay the money they owed the IMF. As a result, they were told, okay, you can wait until the end of June. And hopefully by that point in time, we can get you in a position where we can get you some money and you can pay us a little bit back. And you can have some money to keep the country going. Well, the IMF walked away from the negotiating table with Greece this week. Germany is planning for a Greek exit from the euro. They're prepared for debt haircuts and capital controls. And Harold, we know what that means. We saw what happened in Cyprus with bail-ins. We saw what happened around the world in other scenarios when we had banks go bankrupt. And when a country eventually, which we believe is going to happen here with Greece, goes bankrupt, it will have some sort of ramification for the financial markets. And that's why we believe you do need hard assets in your portfolio, diamonds, gold, and silver, for scenarios such as we could potentially see with Greece. They do not have any money. They're running out of money. And it was funny. I was at a restaurant here in Edmonton run by a Greek family, and they had a lady visiting them, a relative, and she had mentioned to me, we were talking about the Greek situation, and she mentioned to me that her mother, who relies on, which we would call here in Canada, old age security, Canada pension. She did not get it on time. So here's a lady in Greece who's retired, needing obviously her retirement money from the government because that's what she's going to survive on, going to live on. They don't have the money, and the money is coming. Let's say it's promised at the middle of the month. It's coming at the end of the month or even later at times. So it's having a huge impact on the day-to-day lives of people who live in Greece. And Harold, what will happen if they go bankrupt? I don't know. It's a scenario that I guess we'll find out here shortly, because I think eventually Germany will get fed up and just say, that's it. Greece, you can leave the Eurozone. You can default, and we'll deal with you on those terms. But it's something that at this point we do not know what it will do to the financial markets of the world when it does happen. And we have about 4 minutes left here, Harold.
Well, that's very true, because this really hasn't happened in modern days before. So the fact is that initially it'll be a big deal. You'll see the markets react, but after a few days, it'll all get absorbed into the marketplace. So the ones I feel terrible for are the citizens, the people of Greece, because their lives are going to change dramatically in a very negative way, and that's not something that we ever want to see happen. So again, I think that a lot of the market situations will get absorbed fairly quickly, but it will cause the euro initially to drop, and it could drop by 3-4 cents, which is substantial in the currency markets, but then it'll be absorbed again. So again, the biggest problems will be for the actual Greek people that are going to have to go back to the drachma, and they're going to lose most of their net worth. That's why it's important to plan ahead, and when you see these type of things happen, make the type of adjustments to your portfolio to make sure that it protects you more than just going into something with outright risk.
If you missed our quote of the week from Egon von Greyers, who is an advocate out of Switzerland for investing in hard assets, and he has a pretty good track record of predicting some of the things that have gone on with, in fact, he actually called that Switzerland would no longer peg to the euro at 120, and he was right. He says, we live in an illusionary world where public illusions are about to be smashed in the next few years. As an example, the illusionary fortunes of the very wealthy have gone up exponentially in this century. They all believe they are creating wealth based on their skills in investing. Little do they realize the real reason is because they're standing near the printing press in the biggest Ponzi scheme in world history. Get our free weekly newsletter from Harold at rarecoloreddiamonds.com. Call him, speak with him, let him educate you and earn your business when it comes to investing in diamonds, gold, and silver. Call him at 1-800-432-1022, 1-800-432-1022. Our featured diamond of the week, a .20 carat, round, brilliant cut, fancy, vivid, purplish pink argyle. And it's an insurance policy, hard assets. Do we necessarily know what's going to happen in Greece? No, we don't. But if you have that insurance policy, you know part of your portfolio is covered. You have a sleep at night type feeling in your portfolio. You sleep well knowing that you're covered off. And Harold, we have about 30 seconds left here.
Well, again, I'm excited, Randy. I'm seeing a marked increase in our business for much, much larger stones and from all over the world as opposed to just North America. So I'm enthused. I'm excited. There's a lot of problems out there, but again, we're very conservative here. We're not big risk takers, and I think that that's where you really need to be at this particular point. So please give us a call. We can help you. We have several programs that are conservative that can make you a lot of money, programs that can give you a monthly paycheck. So get in touch. I wish everybody a wonderful weekend and a very profitable day.
Thank you very much, Harold Siegel. With the IMF walking away from the negotiating table with Greece, you have Argentina on the hook for $5.4 billion that they owe creditors, and it may mean that they can't raise any further money until they pay it off, and let's face it, they don't have it. So there's another chink in the armor of the financial markets of the world. And we didn't really even touch on geopolitical concerns. Obviously, Putin, a huge concern as well. So it's a time for hard assets. Speak with Harold about investing in hard assets at rarecoloreddiamonds.com or call 1-800-432-1022. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.